Shares in Tesla started the week on a negative note, trading sharply lower after the National Highway Traffic Safety Administration said it was opening an investigation into the electric car maker's self-driving autopilot system. It comes after Tesla suffered 11 crashes since 2018. The investigation spans the entire range, the Model Y, X, S, and the Model 3 as well. Joining me to discuss the stock is Mark Spiegel, Managing Member and Portfolio Manager at Stanphyl Capital Partners. Mark, great to catch up with you again. Let's kick off with the news. What are your thoughts on the investigation?
Well, let me just correct one thing that you said. There were 11 documented Tesla autopilot crashes into stopped emergency vehicles. There are far more than 11 documented Tesla autopilot crashes, including a number of fatalities. So this is just one small facet of the problem. And look, I mean, Tesla, really Elon Musk, has deceptively promoted this product for years and years. Just calling it autopilot is extremely deceptive. Calling, one facet of this product full self-driving is extremely deceptive. They posted a completely fraudulent video on their website to the tune of the Rolling Stones Painted Black, and it's still up there, claiming that there was only a human driver in the car for safety reasons, but he wasn't needed, when in fact it's proven that they spliced together a whole bunch of different takes to make it look seamless. The promotion of this product is a complete and total fraud. So the stock is getting hit for it. It's never been the primary reason I've been short Tesla, but it's just one facet of a very scammy company.
Okay, so what is your primary reason for being short Tesla for all these years?
Well, the real reason is that I always knew, and it's finally happening, that once electric cars were wanted or needed really more for emissions laws in the marketplace, that every major automaker would be cranking out plenty of great electric cars. Tesla people would argue for so long, oh, the wonderful thing about Tesla is there's only, this limited number of moving parts in the car and they're so simple. Well, guess what? That works two ways, okay? The VW, the Porsche Audi engineers who can win the 24 hours of Le Mans, year after year after year after year with incredibly sophisticated, and by the way, hybrid cars in recent decades, can certainly design a terrific consumer electric road car when the market's ready for it. And they have. I mean, Porsche with the Taycan, and there's an electric Macan coming out. Audi has a great range of electric cars. The Koreans, the new Hyundai Ioniq 5 is a fabulous car. The Americans, I mean, the Ford Mustang Mach-E has gotten tremendous reviews, often better reviews than the Model Y. Its real world range is slightly better than the Model Ys, not EPA, and I think you use WTLP there, where Tesla kind of games the test. At any rate, the point is, my real reason for being short this has always been, it's just another car. And it will be just another car once the other car makers start making them. And the automobile industry sells at 12 times earnings, okay? Tesla, sells at hundreds of times earnings. It's ridiculous. Just one little perspective. Until very recently, as of last week, Tesla was valued at 3 times the size of Toyota, while selling 1/13 or 1/12 the number of cars of Toyota. So you're essentially paying 36 times as much for every Tesla sold as for every Toyota sold. It's absurd. The whole thing's crazy.
Well, it's interesting you say that, though, because when we look at its most recent earnings, for example, it staged a massive beat on the top and bottom line. It saw its quarterly net income surpass $1 billion for the first time. All in all, a strong set of numbers there. So there does appear that there is quite a lot to be encouraged about when we look at the delivery figures, for example. And yes, you mentioned the fact that all automakers are poised to release their own EVs, but it feels as though Tesla is ahead of the curve.
Okay, so a few things. First of all, on those earnings, over $300 million of that $1.1 billion were from pure profit sale of emission credits, which they're not going to be able to do after sometime next year, because by sometime next year, every other automaker in the world will have enough electric cars of their own, in fact, probably a surplus, that they won't have to buy these credits from Tesla. That goes away. Number two, it's a little bit in the weeds for our short discussion, but Tesla is extremely aggressive on its warranty reserve accounting. And I estimate that exaggerated earnings by around another $300 million just in that quarter. And I actually put a long, detailed thread about it on Twitter. So if you adjust earnings for credits that are going away and what I believe is an unsustainably phony warranty reserve, I think Tesla made around, let's see, I think they made around 30, I think they made around 50 something cents a share in the quarter. Okay. So if you were to annualize that to $2 a share, the stock is selling at, 330, 350 times earnings when the industry sells at 12 times earnings. So to say that they finally eked out a small profit, well, this is the time for people to say, well, wait a second, the fantasy is over. This is a car company that barely makes any money. Let's value it like a car company. And, the other thing I'll say is people will point to, oh, well, look at the amazing growth. Well, the sequential growth has really slowed to a crawl. In Q2, Tesla sold 16,000 more cars than in Q1. That is a rounding error, right, for any real automaker. I mean, Ford sells that many trucks in, I don't know, probably a few days. Don't quote me on that. I have to do the math. I mean, Toyota, whatever. So the year-over-year growth is better. The sequential growth is a crawl. This quarter versus last quarter, I don't know, maybe they'll sell another 15 or 20,000 cars. These are meaningless numbers relative to a company with a market cap of like $700 billion in diluted market cap. It's absurd. It's absurd.
So last year must have been painful for you as a major Tesla bear. The stock rallied more than 740% from the start of 2020 until the start of 2021. Talk to us about your positioning last year and how you're positioned now.
Right. Well, we've been short Tesla a hell of a lot longer than I ever thought I'd have to be short Tesla. I mean, we've been short it really since 2014 in reasonable size. I put on a tiny position in 2013, but it wasn't meaningful. So yeah, we were short. We've been short Tesla, and it's hurt us because I had a lot of stocks that made a lot of money last year, but overall the fund was down a little bit last year, entirely due to the Tesla short. Now, that said, I've managed the risk or I'd be out of business. I mean, I think we were down like roughly 10% last year, despite Tesla being a very big position that, as you said, went up 7 or 8x last year. So I manage around the risk. I stop out stock. That said, right now we're about as short in terms of size and largeness of size as a percentage of AUM as we've ever been. I mean, I got us that way really, really last week. And I know this thing is about to collapse. And I felt it for a while, but when I'm wrong, I just stop it out and put it on a little bit higher. And that's what I've been doing to sort of control the risk and be there when it finally happens. We're also short ARK, which people have heard a lot about, ARKK, which is, that ETF, Cathie Wood gets all things. Where Tesla's a 10% position there. I just want to say Tesla, despite the fact that the US markets set a new all-time high, I think yesterday or Friday before maybe getting slammed yesterday, getting slammed today. Tesla is way off its all-time high. Tesla set an all-time high in February of $900 a share. And, now it's, as I'm talking to you, in the 660s. And ARK is also way off its all-time high. I think ARK's all-time high was around 159 and now it's 115. The point I'm making is this. You may be too young, but in 2000, when the markets really melted down, when the bubble had been crazy, what happened was for about 6 months, the S&P 500 was sort of flattish, while the NASDAQ absolutely melted down over that first 6 months. Then the S&P started breaking down with it. I suspect that the NASDAQ, the QQQ, is sort of the equivalent of the S&P now. It's the blue chip. I mean, Microsoft and Facebook and Google and Apple and Amazon are as blue chip, as any other company in America. So they're equivalent. Whereas what I call sort of the bubble stocks, which is basically almost everything in the ARK ETF and Tesla, I think that's the equivalent of the NASDAQ bubble of 2000. And I think what we're seeing here is the meltdown, which we've seen since early this year in Tesla, with some rallies, and ARK. And I think the rest of the market is probably just about to catch up to that and follow it down exactly as in 2000.
So do you think we're in a bubble then, not just for Tesla, but for the wider tech sector?
Oh my God. I mean, every financial asset is in a bubble. I mean, come on. I mean, we've got inflation in this country. I don't care whether you think it's, what's the word, sustainable or whatever the stupid word, transitory or not. We've got inflation here running 5-6% a year. Even before the whole COVID thing hit in the US, CPI core inflation was consistently running at 2.3%. So even if you said, oh, well, we're going to go back to where we were, once the supply chain opens up and all that, which I don't believe, I think that's nonsense, we'd still be going back to 2.3% core. And I'm looking at my screen, the 10-year treasury here is yielding 1.3%. It's absurd. Bonds are an absurd bubble. Real estate is an absurd bubble. The only thing that's not an absurd bubble is probably commodities, right? They've had a good run, but I think they've got a lot further to go. We own a lot of gold and a bunch of silver. And in fact, I just added more silver this morning, unfortunately, because I see it's down a little, but I've got to stop there too.
When does the bubble burst?
Look, it's impossible to tell when a bubble bursts. You just want to be there when it is, and you want to get not hurt too badly while you're waiting for it. Personally, I think it's bursting right now. I mean, I think the crazy stock, the ARK Tesla bubble burst, beginning in February, and I think the rest of it is starting to burst now. But we'll see. I mean, this Fed taper is clearly gonna crush the bubble. Now, of course, what the Fed will do is, because they're a bunch of cowards who can't see beyond the tips of their noses, what they'll do is, as soon as things start melting down, they'll say, oh, maybe we don't have to taper so quickly, or, they'll stop the taper or whatever. But I mean, the writing's on the wall. It's going to, which it already is doing, it's going to just show itself in crazy inflation, and I think stagflation. I think we're re-entering basically the 1970s, and that was a terrible time for stocks, the first half, because you got this, as you had inflation, you had huge PE multiple compression, across all assets. And, it was a terrible time here. I know it was a terrible time, in the UK also, that first half of the 1970s, economically. And I think that's where we're entering.
You mentioned gold, so that kind of loops us back nicely to a question I had on Bitcoin and the relationship with Tesla, because Elon Musk obviously has been causing quite a bit of confusion around his position on Bitcoin and whether it will be accepted as payment by Tesla. Early in the year, he said they were going to accept Bitcoin. Then in May, he said they weren't going to. And now he's sort of suggesting that Bitcoin might be an accepted form of payment once again. What do you think is going on here? What's affecting his indecision? And I'd also be interested in your view on Bitcoin as well.
Well, as far as Musk goes, it's obvious what happened. He thought he could get a nice pump in Tesla stock by saying, oh yeah, now we love Bitcoin. He figured he'd grab that crowd. But then he got so much pushback from the environmental crowd about how dirty it is to mine Bitcoin that he's like, oh, well, this isn't good either. So I think I'll just step back from the Bitcoin. So what he does with Bitcoin or not isn't going to make any difference. Look, bigger picture, I've never had a Bitcoin position, long or short. I never will have a Bitcoin position. What I've said in the past is Bitcoin is just, in my opinion, another absurd creation of this bubble with too much money to go everywhere. There's actually a very, very smart retired hedge fund manager in Texas named John Arnold, and now he just runs a charitable foundation. He was a former energy trader. And he said, like in March, he put something on Twitter. He said, basically, I'm paraphrasing this, but he basically said, central banks have printed so much damn money that people have invented entire new categories to shovel it into. And one of them is cryptocurrencies. One of them is NFTs. One of them is, rare sneakers. I saw the Monterey Classic car auctions last week, had a record, they sold over $300 million worth of cars in California. I mean, the whole thing is absurd. When that money goes away, all of this nonsense is going to go away. So, I mean, if Bitcoin held its value, over the next 100 years, I might say, okay, that's an alternative to gold. The odds, let me put it this way. The odds are against Bitcoin, okay? Gold has whatever, a 3,000 year or 5,000 year track record of sort of, being a store of value. Bitcoin has a 10-year record of of being completely erratic, right? I mean, it goes up 10,000%, it goes down 50%. So who knows with Bitcoin? To me, it's just a gambling toy, and I just avoid it.
Okay, and very finally, Dan Ives, head of tech research at Wedbush, who we speak to regularly, a well-respected analyst on the street, is very bullish on Tesla. He's got a 12-month price target of $1,000. We're currently around 660. Where do you see Tesla by the end of the year?
Look, I'm the last person in the world you want to hear a short-term stock prediction from, because if you asked me in 2015, where Tesla would be by the end of 2016, I would have said a split adjusted $100, right? So, okay, I'll tell you, I think there's a really good chance that Tesla keeps melting down, and it's $200 a share by the end of this year, and lower than that after. My target is maybe $30, $40 now, but don't listen to me on timing, because I've been wrong on it for years. I'll say this, I'll give this credit to Tesla. Elon Musk was able to lie so often during capital raises and omit material facts during capital raises that he was able to raise enough money that it's extremely unlikely that Tesla will be bankrupt anytime in, certainly the next number of years. I mean, they have enough cash. And for years, I said Tesla is zero, because I assumed that its CEO would have to basically obey the law and not be able to, commit securities fraud. But the SEC felt differently, at least under the last administration. So I fully concede, I no longer think Tesla is a zero, but I think, Tesla's headed to, I don't know, $30 a share, something, down like 95% from where it was last week. Let's put it that way.
All right, Mark, thank you so much for sharing your analysis. It's been great chatting to you, as always.
Okay, well, likewise. Thanks for having me on again.
That was Mark Spiegel, Managing Member and Portfolio Manager at Stanphyl Capital Partners. I'm Victoria Scholar, and you can find more from me on Twitter. I'm at VictoriaS_IG.
For more videos like these, you can follow us on Twitter, Instagram, and subscribe to our YouTube channel.